Hi, and welcome back to our weekly market update from Morton Brown Family Wealth. I'm Dennis Morton here with Cody Demmel. How are you doing this morning, Cody?
Good. How are you?
Good. It's June
Good.
17th. We're reporting, when the markets are recovering back from a pretty substantial drop last week. And we want to focus on a couple of things. One is the data is in on how investors behaved over the last few months, and it's pretty surprising. We're going to highlight a couple articles there and the decisions that retirees are having to make at this really volatile time. And the second thing we're going to touch on is speculative day trading. It's 1999 all over again in some respects. And what are we seeing from the bidding up of prices in some pretty strange companies? So let's start with some of the decisions that people have to make. Cody, there was an article in the Wall Street Journal this week about retirees, how they're invested, the decisions they made over the last few months. What did that article talk about?
Yes, there was an article in the Wall Street Journal. It was titled "Investors Approaching Retirement Face Painful Decisions." So the article was gathering data from Fidelity about what Fidelity's clients over age 65 were doing the past couple months. I thought the most shocking and honestly sad number to see is that a third of their investors age 65 and older sold all of their stock holdings between February and May.
Not
some of their stocks, all of their stocks. Yeah.
Right. And they profile two specific people. One is, I believe, a 62-year-old surgeon. Another is a business owner who was in his 60s. And they just talked about, going to cash. One of them didn't go all to cash, but substantially reduced. The other had been in cash for most of the last 20 years, right?
Yeah. He said he's been in cash, I think it was from like 2005. And he even said in the article that he knows stocks are always going to go up over time. It's going to be volatile, but he's just still holding cash over the past 15 years.
So it got us thinking about going to cash and what are the, there's no risk-free trade. You're always trading one risk for another. And, for many people we talked to, sure, there was a lot of momentum to try and get out in March. There was so much uncertainty. The market bottomed on March 23rd. But I think we've seen indications that people have been selling into this rally, especially retirees and pre-retirees have been selling into this rally. Fisher Investments came out with a line last week that I thought was great. They talk about break-even-itis, or people, they got through the lows, they were happy they didn't sell there. They say, if I could just break even to where I was at the high water mark or at the end of last year, if I get to break even, then I'll sell. And they had a great point that said, for most rallies like that, once you get to break even, on average, there's another 44 months, almost 4 years of bull market before the next bear market. So this idea of just break even, sometimes you miss a substantial amount of the rally that comes after that. And you found a number. 2018, we had a dip, and then we had another dip now. Where are we relative to the 2018 lows now?
So I pulled up the return from Christmas Eve in 2018, which were at the lows when we had the sell-off towards the end of 2018, till today, Wednesday, June 17th. We are above 30% from where we were at Christmas Eve in 2018. So and that's including the big downturn that we've had in February and March this year.
Yes. So if we're close to break even now, right? Maybe we're close to where we were at the beginning of the year or at the market highs. There you're going from trough to peak to trough to break even. That's a 30% return just to get to break even from where we were. So there's a lot of psychology involved in this. And frankly, that's one of the roles that we have to play as advisor, is trying to lend some perspective, because otherwise the emotions can get so strong. And the one investor said something to the effect of, I'm worried about a 40 to 50% drop. This is the guy that was all in cash and CDs. So a 40 to 50% drop describes what happens to a 100% stock portfolio. That's the kind of risk you're taking on. He's worried about being completely exposed on one end, yet he's completely inexposed on the other with nothing in between. And that's where, from my perspective, I would say there's something in the middle there. There's a middle ground, but it sounds like he's lacked confidence. He said, I just never felt like I could get back in the last 15 years. And that's a scary thing, because it's not all in or all out. It's those degrees. It's that balance of things that's the challenge. But when you hear a third of investors bailing, and that just sets up a really challenging set of decisions for somebody who's 62 and has a 30-year time horizon.
Yeah.
for investing.
Yeah.
So you had a great chart. So if we move to cash, what's the risk there? Can you pull up this?
Yeah, let's pull that up. There we go.
That's what we're looking at here.
Yeah, so this is from 2000. So over the past 20 years, from 2000 till today, the purple or blue line is inflation. So what inflation has done over those 20 years. So it's up around 50%. And the T-bills, which is what we use to represent cash, is up 37%. So in real money, if you were just in cash over the past 20 years, you have actually lost assets. Even though it looks the same in your bank account, you have actually lost assets because of inflation's eaten into it.
Yeah, I'd like to point out one thing here. Like, look at this inflection point right around there, where you have, cash. Remember, through the 2000s, we could earn 5% on a CD or money market. Interest rates are high. As soon as interest rates leveled out, look at this return on cash. It just completely gets destroyed. That's a low inflation environment. Inflation was less than 2% for most of that. But for somebody who got spooked into cash back in 2010, 2009, 2010, the erosion of your purchasing power was pretty substantial over that time. So moving to cash isn't a benign event. It's really a powerful conversation that you need to have some process, you need to have some counsel and work through. It's not an all in or all out type of decision that has to be made. I think it's also interesting on this 20-year horizon is somebody in 2000 was standing on the precipice of maybe the dot-com bubble bursting, 9/11, the great financial crisis was still ahead of them. Now, of course, this recession and COVID-19. Yet through all of that, the market's up substantially over that time through all of those crises. So we just have to measure sometimes that these events, they come and go, and they're always of a different nature. But the cash decision is a pretty substantial one and consequential one. So the other phenomenon that we have here is what's happening in speculative trading. What have you seen? I mean, this has been really in the news the last week or so.
Yes, there was an article in Business Insiders that was going over how much day trading has gone up over the past couple months. And it's not that they're just getting into the market to invest long term. It's the day trading where they're buying an airline stock that goes up or down 10% a day, then they're selling it. It's same with cruise lines and all these speculative stocks that are just, I mean, it's honestly just crazy how some of these stocks are trading over the past couple months.
Some of the most egregious example has been the story of Hertz, the rental car company, which is in bankruptcy. Its bonds are trading at 30 cents on the dollar. So that tells you if the bondholders aren't getting paid, then the stock is practically worthless. It's worth nothing.
Yeah.
Yet traders have bid that stock price anywhere from pennies up to $5 and back down to $2, and they're just trading in and out of that stock to the point where Hertz was capitalized enough that they could issue new stock because there was demand for it. And there was a CNBC article that said that the headline was, Hertz says it expects stockholders to lose all their money in filing for selling more stock. And yet buying it. So this brings us to a concept that existed for a lot of the last decade, which is the acronym TINA, T-I-N-A, as in there is no alternative. That when interest rates are zero and money is cheap and you can't get returns on safety, people start seeking out risks in some pretty strange places. Then overlay on that, you pointed out there's no sports betting, there's very little entertainment, there's not much to do, people are sitting at home. Suddenly you have day traders, you have people using kind of investing as entertainment combined with people saying, I need to get my returns somewhere, and it creates these massive distortions in the market. So
or people like we talked about in the first article that sold out and they're trying to make up the returns.
Right, it creates that sense of, oh my gosh, because we are up, almost I think about 40% off of the March close at this point. And if you were one of those people that sold out before, suddenly you feel like, oh my gosh, maybe with one of these home runs, I could make up some ground. It's rarely, if ever, done well. And it just defies sensibility at this point. So I think that there's a lot of noise around speculation right now. It's almost the opposite side of that. Citigroup had their panic euphoria model that says we're back to euphoric 1999 levels.
Yeah.
Don't read too much into that. It's there are certain stocks that deserve to get pummeled, and they probably will in the short term. but we're also seeing higher quality stocks really gain ground over the last month or so. Solid dividends, good cash flow, stable brands that know how to adapt and modify to whatever this environment looks like. You don't need Hertz to be a $5 stock to be successful. What you need to do is be able to hold ground on some of those really key components of a rebounding economy that are still going to be standing. So to wrap up, we're sitting here, we're in yellow, we're leaning into green here in Eastern Pennsylvania. Cody, what does yellow mean for you here these days?
Yeah, so my fiance and I have been doing a lot more things outside. We actually went to the beach this past weekend with our 2 dogs. That was fun and interesting. We are looking at more wedding venues this weekend, so that's good. Finally able to eat at some outdoor restaurants, so that's been good too. Yeah, it's good to finally be able to do things.
Yeah. Although for introverts like my wife and I, we're homebodies. We don't get out too much as it is. This is like the tide going out on introverts. Starting work. Like, hey, wait a minute, everybody's out there doing stuff. So we're kind of enjoying the. There's actually more fire pits at home now and doing those types of things. But maybe we'll get into those extrovert tendencies as people think that's a fun thing to do too. Reach out to us if you have any specific questions. Those cash discussions and speculation, it's a lot of the stuff that's top of mind on the news. So if you have any questions and want us to walk through it, happy to do so at any time. Otherwise, we will see you next week. All the best. Stay safe.